Welcome back. You're tuned into Bazaar Morning Call. Well, let's discuss a few stocks here. Mayuresh Joshi, Director of Research at Marketsmith India, who joins us on the show. Hi, Mayuresh. Good morning. Good to see you. A lot of investors are getting a little bit jittery about last 1 year. India is underperforming, but it's a stock pickers market. And ultimately, don't need to look at it as a T20. Test match cricket suddenly came back into play. So I'll draw inspiration from that. And, I'll encourage people to build a portfolio for the longer term. That said, let's discuss a few stocks. Coal India and NMDC, they came out with an operational update. Normally not a big mover, but good to see there is growth coming on a low base. What's your view on both or either of these two names?
Morning, Nigel. But let's also not forget that England has baseball, which means that they play momentum cricket in Test cricket as well. However, I think in markets like these, I think you need to have a stock-specific approach. Specifically for Coal India and NMDC, again, I think the kind of output numbers on Coal India specifically are expected to be a tad bit better this year. The evacuation projects that they are probably doing and are underway, I think that should start having results. And the fruition thereof will start getting displayed, obviously in better output. Obviously, I think expectations in terms of realizations, when it comes specifically to e-auction revenues, I think that should show some element of improvement, as well as their core revenues as far as different grades of coal are concerned. So I think the output requirement from a power perspective, the expectations in terms of thermal assets still probably being required for a country like ours. I think that should ensure that there is a stable output and stable realizations going ahead. For NMDC in particular, again, I think the expectations in terms of rationalization of prices, both in terms of lumps and fines, I think that should largely, again, stabilize as we speak over the next few quarters. The downstream operations thereof and the sum of value parts that probably come through are also value addition from a price perspective. Again, let's not forget that the dividend yield for Coal India is significantly higher. And therefore, I think the stock might continue doing well as far as numbers are concerned. But as numbers improve, I think the same will be reflected in stock prices, both for Coal India and others.
Okay, got it. Mayuresh, hi. Auto is the hot space, right? Major buying position build-up happening before the event. Across the board in stocks, including something like Eicher Motors, perhaps, which was up yesterday 3%, though there is a fear there about what happens to bikes which are above 350cc. So, what is your advice? Do you like anything here in large cap auto? And where do the four-wheeler makers fit in? And I'm not saying M&M, but basically stocks like Hyundai and Maruti.
Morning, Surabhi. So we continue holding Hyundai India and TVS Motors, respectively, from the four-wheeler and the two-wheeler space. Our own sense is with rationalization expected to happen, and there are still ifs and buts in terms of what the ultimate prices will be in terms of rates. But what we've seen so far in terms of volume growth has been steady state. Expectations in terms of the festive season and GST rationalization might actually add up in terms of volumes for a few of these auto companies. I think the whole universe will probably benefit. But again, I think from a construct in terms of how ratings and rankings are placed, how the cancelling mechanism is placed, I think Hyundai with the kind of SUV portfolio that they probably got, the expectations in terms of a very strong balance sheet, I think we continue remaining optimistic and holding that stock in our local and global portfolios. Similarly for TVS Motors, I think the EV platform has been doing exceptionally well. They're expanding truly in the rest of the country as well. They're looking at export orders as well. And therefore, I think from a margin profile perspective, the kind of improvement that we've seen in margins for TVS Motors over the last few quarters, our belief is that that might be sustainable and that will reflect positively on numbers. So I think we've got a couple of holds, Hyundai and TVS from the other space.